Welcome to your channel, Dr. Gazavi. Economics and financial issues are very important. Let's go.
Gold and the herd of cryptos, saving oil in blurry times. Abstract. This paper assesses the effectiveness of a broad set of 1066 active and continuously traded cryptocurrencies as a safe haven instrument against extreme oil price movements, in comparison to the corresponding roles of gold. The uncertainty for the oil market during the COVID-19 pandemic and the subsequent Russia-Ukraine conflict set the tone for natural experiments for our study. We use a trail-blazing dynamic generalized autoregressive score model to estimate the tail riskiness of the potential safe haven assets from January 1, 2020, to September 30, 2022. By estimating the risk exposure of all cryptocurrency assets, we determine top 10 safest assets for investment. Our results show the emergence of new safe haven cryptocurrencies, which have previously been ignored by the academic literature and policymakers alike. Intriguingly, our findings reveal that gold has been replaced by altcoins as the safest assets during both the COVID-19 pandemic and the Russia-Ukraine conflict. At this instance, our findings suggest that Bitcoin provides lengthier safe haven properties than gold for oil returns in both periods. However, the safe haven properties of gold and cryptocurrencies are time-varying. Last but not least, we introduce a new cryptocurrency tail risk index, CTRI, that captures the risk exposure of cryptocurrency market as a whole. Our results suggest that investment in numerous cryptocurrencies provides lengthier safe haven properties than investing in gold alone. 1. Introduction. The COVID-induced economic uncertainty has led to a severe deterioration not only at the financial markets but also for energy markets. In the aftermath of the COVID-19 pandemic, especially the Russia-Ukraine conflict, renewed questions have been targeted on the safe haven investment space for cryptocurrencies. Extant studies on the subject have mostly concentrated on the attribution of safe haven benefits for stock markets, whilst limited attention has been given on the energy markets, and in particular, the oil price movements. Besides, the existing studies have more often focused on traditional safe haven assets, such as gold, and to a lesser extent on the digital gold, Bitcoin. There is a sparse body of work focusing on the safe haven properties of other cryptocurrencies against oil price movements during the periods of market turmoil. Undoubtedly, the COVID-19 pandemic has brought an imbalance between supply and demand for energy across countries, causing high oil price volatility. For high energy-consuming industries that use oil as an input for production, their costs fall, profits surge, and share prices rise, but for others, such as energy-supplying companies, the fall in energy prices led to otiose profits, pushing numerous of them to exit the business. To make things worse, the outbreak of the 2022 Russia-Ukraine conflict appeared to have further enhanced the volatility of energy prices, causing severe disruptions in the supply chains and restrictions in the availability of fossil fuels. Investors often seek for safe haven assets to offset the energy commodity risk. Since future remains uncertain, and forecasts are difficult to make, energy markets are expected to face huge losses. Traditionally, gold has long served as a risk management tool that maintain or appreciate in value during times of market. In recent years, numerous studies explore alternative assets that may act as safe haven, and a large focus has been given to digital currencies, and in particular, Bitcoin. However, the results about the diversifying benefits of Bitcoin remain mixed and are often generalized for the whole cryptocurrency market. In fact, the existing literature has paid relatively little attention to the safe haven characteristics of alternative cryptocurrencies, altcoins, relative to oil price movements, and has not extended this comparison beyond the initial phases of the pandemic. Considering the 2022 Russia-Ukraine conflict, Our paper fills this gap in the flight to quality literature by answering the following questions. Do cryptocurrencies serve as a safe haven against oil price movements during the COVID-19 pandemic and beyond, after the outbreak of the 2022 Russia-Ukraine conflict? What is the risk exposure of altcoins, and how they rank compared to gold and Bitcoin? To address these questions, we consider a broad set of 1066 active and continuously traded cryptocurrencies, estimate their tail risk based on a trailblazing dynamic generalized autoregressive score model, and assess their safe haven properties against oil price movements. Relative to gold and Bitcoin. The present study makes contributions to the literature at least on 4 aspects. First, this paper contributes to the fast-growing literature on safe haven assets. The majority of studies in the field have been, to a great extent, focused on gold and Bitcoin, and merely a few consider its larger family of cryptocurrencies. In this paper, we consider a big data set of 1066 potential safe haven cryptocurrency assets, and then empirically examine their effectiveness toward oil price movements compared to gold. Beyond that, to facilitate the sudden and great increase of investors who search for safe haven assets, we evaluate the risk exposure of our cryptocurrency assets and gold, and rank them along their safe haven properties to provide a robust comparison. Our results indicate the emergence of new safe haven cryptocurrencies, which have previously been ignored by the academic literature and policymakers alike. Intriguingly, our findings reveal that gold has been replaced by altcoins as the safest assets in the COVID-19 pandemic and the subsequent Russia-Ukraine conflict. Second, this paper contributes to the small but gaining popularity literature on energy risk management. Numerous studies in the literature have shown that oil price fluctuations have substantial effect on financial markets. Consequently, it is essential to model the tail behavior of oil price movements via an accurate tool for energy price risk management. Unlike some studies on the tail risk property of energy commodities statically based on the value at risk, VAR, or expected shortfall, S, and their variations, we measure the tail risk through the estimation of a joint dynamic model of ES and VAR. Third, we introduce a new cryptocurrency tail risk index, CTRI, that captures the risk exposure of cryptocurrency market as a whole. In contrast to the current cryptocurrency indexes based on the news coverage data, our new index relies on the actual trading data which cushion the impact of speculative nature of media over the index movements. The CTRI index aims to support the delivery of risk-informed investment by green investors, and policymakers who make investment decisions, primarily in the financial sector. In this study, we utilize the CTRI index and aim to assess the potential safe haven property of cryptocurrencies against oil price movements. However, its applications are not limited to that and can go beyond, such as, in forecasting, market efficiency, risk management, climate finance, and so on, which further justifies the importance of the index introduced in this paper. Last but not least, the existing studies in energy literature has been intensively focused on the context of the COVID-19 pandemic. This paper goes beyond and covers not only the period of the COVID-19 pandemic, but also the outbreak of the 2022 Russia-Ukraine conflict, which has notable impact on demand supply chain and energy market. By doing so, we are one of the first to assess the usefulness of cryptocurrencies to act as safe haven for oil price movements in period of energy market turbulence. 2. Conclusion. Our empirical results suggest that cryptocurrencies can act as safe haven for oil market during periods of market downturn. However, the safe haven property is not persistent over the full period, but it varies over time. We denote that Bitcoin often offer better safe haven properties than gold, especially in the early stages of the COVID-19 period. Nonetheless, the altcoins can offer lengthier safe haven property than both gold and Bitcoin during the COVID-19 pandemic. To investigate the safe haven characteristics of the whole crypto market, we created a new cryptocurrency tail risk index, CTRI, that captures the risk exposure of cryptocurrency market as a whole. We found that cryptocurrency market as a whole can be safe haven in times when the large cap cryptocurrencies such as Bitcoin and traditional assets such as gold fail. This finding is valid regardless the estimation period, either it is COVID-19 or the 2022 Russia-Ukraine conflict. In other words, adding altcoins to an investment portfolio reduce the oil risk at least as good as gold and Bitcoin. Our empirical results rely on big data consisting of 1066 active and continuously traded cryptocurrencies. Such large dataset provides us with a handful tool to explore the safe haven properties of not only the large cap digital assets but also on their small cap counterparts, i.e., altcoins. Thus, we provide a ranking with the top 10 safest cryptocurrency assets over the span of the full sample period. This finding is crucial for investors and policymakers in their attempt in searching for safe havens against oil market risks. In this circumstance, investors may look for best strategic response by exploiting as much dynamics from the data as possible, especially heterogeneity and tail risks and its exceedances. Our paper contributes to the current knowledge on the tail behavior of cryptocurrencies, which is vital for investors, portfolio managers, and financial advisors targeting lower risks in time of market downswings, and for policymakers trying to cushion adverse impacts of energy market risks on the economy. Several policy implications can be derived from our results, contributing to the broader knowledge of investors and policymakers on safe haven assets. First, our study determines that among cryptocurrencies not only Bitcoin but also altcoins exhibit safe haven properties against adverse oil price movements. Therefore, investors can consider including altcoins in their portfolio baskets in order to minimize the non-systematic risk that comes from energy markets, especially in times of a health pandemic and military conflict. Second, policymakers can implement reforms for a sustainable financial system that stimulate investment in cryptocurrencies. Our findings determine that gold does not act as a safe haven for oil market in a period of high economic uncertainty, in particular, during the first stage of the COVID-19 pandemic and the onset of the 2022 Russia-Ukraine conflict. However, the safe haven properties of gold are exposed when the intensity of the COVID-19 pandemic slows down. Hence, policymakers need careful assessment of the role and scope that gold plays in countries' financial system in attempt for creating stable financial system resistant to high economic uncertainty. Digital assets, such as cryptocurrencies, can contribute in creating such organic financial environment in a country. Overall, both investors and policymakers need not negligee the diversification properties of cryptocurrency assets, especially in times when global economic climate is triggered by high uncertainty. Our paper suggests several avenues for future research. First, we focus on the energy market, as it has experienced large fluctuations in the COVID-19 pandemic and the subsequent Russia-Ukraine conflict. However, a future study can utilize our top 10 safest digital assets list to explore the safe haven ability of the listed cryptocurrencies for adverse price movements in stock markets, for example, in countries at various stage of development. Second, a further study can explore the safe haven properties of cryptocurrencies for a broader set of commodities, for example, agricultural commodities, whose terms of trade have been significantly affected by the outbreak of the 2022 Russia-Ukraine conflict, resulting in high risks and price uncertainty. Finally, it would also be interesting to investigate the safe haven characteristics of the cryptocurrency assets and gold in the later times of the 2022 Russia-Ukraine conflict by applying realized measures for tail risk forecasting.
Thank you for watching, and please subscribe to our channel. Economic and financial issues are very important. See you in the next video.